Hello, ladies and gentlemen. It's Modern Investing on Pod TV. My name is Sasha Star, and today's our guests are Dr. Milan Sambarak. Welcome to the show, Milan.
Thank you for inviting me. Delighted to be here.
Our pleasure. And Jim Eat from Eat Foundation. Welcome to the show, Jim.
Thank you so much, Sasha. Great to be here.
Great to have you, Jim, as always. So, it's today Wednesday. The market showing a lot of greens, right? And,
Only Nvidia is down.
but what's interesting is
Well said.
NVDY has declared another weekly dividend of 16.5 cents. So
Ah.
you know what? I figured out very interesting thing. I for some time now I don't have any shares of Nvidia. I decided that because NVDY really depends on Nvidia quite a bit. And I have a lot of those NVDYs. Because of my greediness, and I'm trying to collect dividends as much as I can. Even the 16 and a half, I figured out that for me it's like $2,500 every week. Who could, a lot of people working
Add up.
are not making this money, believe it or not. So in this case, I decided that as I said before, quite a few times, I expect Nvidia to go lower at this point because of different factors. I mean, Nvidia will have another incredible earnings by February, but you see, there's a lot of things going on, and different alliances are between different companies, and different short sellers are saying, "Oh, it's overpriced. It's has to go down," or so on. And I decided, okay, I'll give them a chance. Okay, you can drive Nvidia down to 165, and there will be a lot of support. The next line after 165 is 150, and that's really the lowest that I can see Nvidia can go in the foreseeable future, because I remember a few months ago, 150 was a resistance. And Nvidia was coming 135, 145, 150, down. Another attempt, down. And only finally, just a few months ago, it broke through 150 to 175 to 200, 212 was the highest. Okay, so it has to find its a channel between, probably, I don't believe in the 150, because that's what usually the resistance is becoming a support. As one commentator says, there is a tendency to come back to the scene of the crime. Okay, so I love this explanation, but I still don't believe in 150, 165 is more likely. But even that is not so easy to achieve with a stock like Nvidia. So when it was already over $200, coming down to 165, it's a considerable move back in percentage wise. I don't believe in it, but it's possible. At 165, I will be a buyer. I'm telling you that for sure, with my NVDY position. How are you doing these days, Jim? What's
Well, one of the things that popped on my screen today was Marvell, MRVL is the ticker tape, um, jumped almost 7% because, and it was after they bought another semiconductor startup, Celestial AI. And the
Mhm.
deal was worth $3.25 billion, and gave a bullish forecast. And often when a company buys another company, the stock dips. But Marvel popped, and I bought it, much lower, and I sold it when it hit 90, because that was the target price that I set. But I only sold half, and my strategy there was to sell half because then I got my target price. I was happy. But if it went up further, then I still ride the upside. And it's now at 97. Who knows? But I still believe that AI and the companies that make the chips that support it, we're still on the startup phase of that development. People are talking about a bubble. I don't see any signs of a bubble. I just see more need for AI and more companies investing in it. And the companies that are poised profit the most, ones that are generating the chips that support it. And NVIDIA is the prime example of that, and the most lucrative and the most revenue generating. But Marvell is also generating eye-popping revenues, allowing it to buy for $3.25 billion another company that is better poised. So they've done a successful pivot from the semiconductor chip making of the past to the semiconductor chip making of the future, programmable chips, so that companies can target them for their business and needs much more easily than they ever been done in the past. And again, I don't see that in the near future or the foreseeable future declining. These revenues are going to continue to grow. And as long as I'm investing in those companies, I feel positive about the market in general, although there's other things that make me jittery. The market's a little choppy today. It's not a great day, but it is a positive. All the three major indices are up. So there's a lot of bullish sentiment, and I think we're over the September, October, November doldrums, and people are starting to feel positive about the market growth.
Santa Claus rally. Nobody canceled that. Okay, Milan, what about you? Okay, we know about S&P 500 as much as anybody else. Okay, tell us more story about 493 S&P. 493, because we just discussed most of this Magnificent Seven, AI, and so on.
Yeah.
Tell us your wisdom on 493.
The only wisdom I have is by copying others. And one of the major people I copy is David Svensson, who stated, who is David Svensson? Well, he ran the Yale University Endowment Fund, which was the most successful on the planet, and he ran it for years and years. And
in which century was that? 17th, 18th century? When did he do all that? Because nobody today remembers all this.
He was heavily into tulips.
His system still continues. He is no longer alive, but the people that work with him continue to practice the system. So he says the best way to ensure success is to buy the U.S., to have a 50-50, an asset allocation. Mine is 50-50. 40-60 also works, and 60-40 does, and 55-45. Any asset allocation where you have a lot of cash. Wall Street doesn't like that because they don't make any money on the cash portion of your portfolio. So if you have 50-50 asset allocation, the way I do, 50% in the U.S. cash, cures money, and 50% in the U.S. market as a whole, best represented by SPY. There are several exchange-traded funds which track the S&P 500, but SPY happens to be the best. And so if we do that, my members of my club, Monday Morning Millionaire. Why is it called Monday Morning Millionaire? Because most of our members make more money on a Monday morning before breakfast than they ever did in a whole week while working at their jobs. So,
what time is their breakfast? I'm curious.
Well, the market opens at 9:30, so we have breakfast at 10. Let's say. And so,
okay, good enough.
So now, an inverted yield curve is dangerous, and we now have a normal yield curve, which is encouraging. However, the cyclically adjusted price-earning ratio is near its all-time high. It's at 40 now. The only time it's been higher was during the dot-com bubble in 1999. It was 44. But it was at, what do we got here, 36.9 just preceding the depression. And we're now at 40. That is very dangerous. And so that is a metric that we should pay a lot of attention to. So,
tell me please, Milan, if Svensson would be still alive today, so with all these movements in gold and silver, with the Bitcoin is taking more and more attention from institutional traders, and there is already evidence that Bitcoin predicts around 6 to 8 weeks the movement of the stock market. So obviously, every time when Bitcoin would slide down 20, 25% or even more, then 6, 8 weeks later, stock market was going down. No, maybe not to the same extent, but close to it. So would Swenson be alive? I'm sure he would do some adjustments to what he's preaching and all this old-fashioned market capital allocation that would be probably right, say 100 years ago, maybe 150. He would not recommend all that today. It's a time of modern investing. It's a time to be agile. It's a time when the allocation 50-50 doesn't work. You're losing your investments because your cash is not doing anything. It's losing
Did
its
you hear me,
against
Sasha?
gold, against almost anything. And
Did
you're 50% invested in 493 redundant, useless stocks. So you're cutting yourself short instead of investing in 7 stocks where all the action of S&P is. There is no other purpose in S&P rather than the 7 leaders and all the 493. It's a useless ballast that keeps you from really making any money, and your cash portion is losing its value against.
that would be true about the cash portion. But did you not hear me say, Sasha, that our members, Monday Morning Millionaire, we have a little over 350 members or so, are using the system that David Swenson recommended. We are making more money on a Monday morning before breakfast than we ever did in a week while working. And that's still working for us, and we're going to stay with anything that works. Picking stocks doesn't work much of the time. It does occasionally, but most people investing in the market are losers, and they lose by actively trading, and by picking stocks.
Well, I want to make a comment about the dot-com bubble, and you're saying that there's a danger sign about the price earnings. With the dot-com bubble, there were no earnings to support the prices. And what I'm talking about in the AI sector right now of the market, the revenues are eye-popping. So it's not correct, in my opinion, to compare that situation to this and say that we're right on the verge of a bubble. It's an easy mistake to make because people do superficial analysis. But the fact of the matter was, in the 1990s, and I got out, I would say 3 months before the bubble burst.
Yeah.
And, so my wife, she's since changed her mind, but she thought I was a genius at that time. But, there's no signs of a similar bubble now because the revenues that they report every single quarter have been enormous. So that's the main difference between now and then.
Well, that a trend is more likely to continue than it is to reverse itself. However, trend reversal is one of the few absolute certainties in the market. So
correct. And I never forget that that's possible, but I don't see this trend stopping anytime soon. I do see that the revenues that they're generating, I can't imagine, it's possible that Trump will throw a monkey wrench into the world trade market and everything will collapse. Absolutely, it's possible. But, as long as something of that magnitude doesn't happen, I see that normal business being conducted in the normal ways, then this revenue generation is predictably solid. And not only solid, but growing. Where, like I say, we're just on the beginning of it. So, these historical comparisons will look more and more useless as we go on because the revenues are what's driving it. It's not a hysteria. It's not, get on board this because it's the faddish thing to do. It's because the money is there. That's where the companies are expanding, not contracting, expanding. And, sometimes they will overexpand and there will be a problem in the future. No question, these things happen. But there's no sign of that happening anytime soon.
Well, are you saying, James, that you can ignore the cyclically adjusted price earnings ratio?
I'm saying it's not as much of a driver as it was in the past, because really what we're talking about now is predicting revenue growth in the future. And you do some analysis, like is the company saddled with debt? Has it overexpanded, for example? Then you kind of shy away from that. But companies that have cash, revenue, and they have a lot of cash on hand, so their expansion, they pay for it themselves. Like the acquisition Marvell just did of another company for $3.25 billion. That was something they did not have to go into debt to do, because they're generating so much revenue. And this is the kind of thing that's different. So you take it on a case-by-case basis. Not every company that has AI, it's like not every company that had a .com after it was a good investment. But you look at the ones that are actually performing, such as NVIDIA. And yeah, NVIDIA's stock price may go down. I still own it. I have sold it and rebought it, and I may do that again, depending on what happens. And with Marvell, I have bought it and sold it and bought it and sold it, and I still own it. And I still own the NVDY that Sasha turned me on to over a year ago. And so these are the types of things that are not the historical approaches, because they didn't exist in the past.
By the way, I'd like to make a very interesting disclosure. I spent about an hour and a half last weekend I've looked at these different sites that discuss investments and companies and so on. And I looked at about NVDY at great polarization of opinion. Some people saying it's so dangerous, it's so risky, it doesn't pay because it's going down when it pays dividends, then goes up again, and so on. So it's very difficult to make any money at all. And those people are incredible majority. Yeah, yes, Milan. Okay.
You have to have a difference of opinion,
Yeah.
because if you didn't,
That makes markets.
there would be a market. Yeah.
Okay. So the other side is not so numerous, but they're saying that it works for them. And I decided, well, it works for them. It works for me too. But how much it works for me? What's exactly the numbers? Now, my challenge was that at different times I had different number of shares. So then, of course, the more shares I had, the more dividends I collected. The less shares, less dividends. I remember there was time late, I think late last year, I've just because at that time they were paying monthly dividends. So I decided to go to 4 different groups, so I would collect dividends every week from one group, then next week. So I sold some NVDY, I put more money in, decided what some additional shares, and then I discovered a few months later, maybe even 2-3 months, I discovered that NVDY is more predictable. It's paying better dividends. And because it's tied up to NVIDIA, and NVIDIA was an uptrend, so I decided that even fundamentally, that represents a better option than others. Okay, so I'll be paid once a month. But now when they switch to once a week, then it's become a gold mine for me.
Win-win.
Then calculations. Okay, listen to that. I took 7 months from April 1st to October 31st. 7 months where I had the same number of shares, 15,000 shares, all that time. And so that was very easy to figure two numbers. Number one is fluctuation of price of NVDY. And because to me, regardless what's happened, it's a paper win or paper loss, depends which way. So in this case, it was less than $1 paper loss if I'm taking Friday's closing. And usually Friday's closing is the lowest on NVDY because Monday, it's Wednesday is declaration of dividends. So Monday, it starts working up. So I decided to take the real scenario. Okay, here is April 1st, here is October 31st. So the paper loss was less than $1. To make it easier calculation, it's a dollar paper loss.
Well, here's a question I have for both of you. When you buy a stock, you are buying it from someone who's selling it.
Okay, we'll discuss it in the next 10 minutes. It's very important information for us. We'll discuss it for sure. Yes, we are buying from somebody else, and we are selling, somebody else is buying. Wow. Is it
Can
so?
both of you be right?
Is it so unfair? But I don't know any other way how to make trades.
Can
So,
both of you be right?
okay,
And
hold
if you don't know another way, let me suggest another way for you, Sasha. Buy the American economy as a whole.
Milan, is it worth what you are interrupting me? I'm trying to help you and I'm trying to disclose very important information, and you just keep interrupting me. Why? Why are you
Well,
doing that?
Sasha, I'll tell you what it is, Sasha. When you are right, I agree with you. But when you are wrong, I
So
cannot.
what did they say wrong that you disagree with me and you interrupting me?
Well, picking stocks is dangerous because when
That's
you
just your opinion. You cannot tell me that I'm wrong. It's just your opinion, which is different from mine.
Sasha,
That's all
Sasha,
there is to it.
do you recognize the fact that most investors in the stock market lose?
Milan, I'm asking you, is it what you're telling me about that when we're buying stock, we're buying from somebody else? Then you came with the idea that buying stocks is dangerous. So you interrupted me while I'm disclosing unique, very interesting information. Okay, what you're saying is you don't want to hear any more about what
Listen,
I'm
I apologize for interrupting.
right there.
I apologize for interrupting you. And so, what I want people to understand who are watching this program, when you buy a stock, you're buying it for somebody who is selling it. Can both of you be right?
I'm not going to interrupt. Keep going.
Can both of you be right? If one is a buyer, the other one is a seller. Can both be right? No. One is right, the other is wrong. That's the problem with picking individual stocks. Most individual investors are losers because they pick stocks and because they try to time markets. But buying the American economy as a whole has been a winner. When you take a look at the sovereign investment funds
10
worldwide,
more minutes, Milan. I'll give you all 10 minutes that are left until the end of the show. Keep going.
if you take a look at the world's sovereign investment funds, they are all invested in the American economy as a whole, except for Indonesia, Saudi Arabia, and Turkey. All of them have much of their money, sovereign investment funds, in the American economy as a whole, which is what we recommend. And it has worked for us. You know, anything that works, you want to keep it going. So our members are very happy with what's happening now. Now you're suggesting that David Spencer would not recommend an asset allocation as being the primary driver of success. But is it possible that he just might? Because it has a track record. And so, like I say, most of our members make more money before breakfast than they ever did in a whole week while working. Why would you abandon such an approach?
Keep going.
Well, the American, you're picking successful stocks, but the thing is, if you get the American economy as a whole, there will be losers there, but overall, it's a winner. So, as I mentioned previously, if you take a look at any community, any large town, small town, and take a look at the main street, except for the banks and the occasional professional there, like engineers and medical doctors, all those stores are losers. The ladies' clothing stores are losers. The restaurants are struggling and having a tough time. The gift shops are not doing well. All of them are losers. But on the whole, the American economy is the strongest in history, the strongest in the last 200 years, in spite of the fact that Main Street America is full of losers. The winners more than make up for that. So that the David Svensson approach has been working for us. And why would we abandon something that's working for us so very well? Now, your approach is working for you and for you, James, because you're exceptional investors. Most people aren't. So, and also your approach works in the short run. You know, a trend is more likely to continue than it is to reverse itself, but trend reversal is an absolute certainty. Works in the short run. In the long run, what we're doing has been working for us and working for us very well. And why would we look for something else? Can you tell me
Then
why?
why would your people listen to our program if they already have winning method? They're making money every Monday morning. Why do they need this program at all?
Maybe they don't. Maybe they don't. You know,
Okay.
I detest financial talking heads, but I've become one by being on your program because I want to get this message through. This method that has worked for us, it takes no time at all. When you're picking stocks, you're going to do a lot of studying and it takes a lot of effort. Now, many of our members are still working. So, you know, I retired from dentistry about 7 years ago. But when I was in practice, I had booked aside 15 minutes every day when the market opens. This is on my.
So, Milan, so
Yeah,
your people most likely are not listening to this program because they don't need it at all. It would be a waste if their time is so precious that they are spending 15 minutes a week, Monday morning, to do their transactions. So, listening for half an hour, our program for them, it's definitely a waste of time. So, you're trying to convince into your methodology people who are not your followers, but recruit new people from those who are listening to this program
yeah, right, that's right.
to refute anything what I'm talking about, interrupt me, and carry on your message to the people who listen to the show, and even a small fraction of them would say, "Oh, this." Sasha Starr and James are talking about all kind of nonsense. Here is Milan. He knows what it's all about. He knows that you cannot buy stock from other people because only one of them is right. And Svensson's method of investing and so on. You know what? I don't suggest that we develop some kind of unique uh, followers. Maybe they are there. I just don't have evidence of that. But
But
hopefully,
you know what, Sasha?
some.
Your last name is Star, but you're also a star when it comes to selecting securities. James did the same thing. Most people aren't stars. Most people are average. Most people can learn a lot from watching this program. And what you're doing requires a lot of time. Whereas the Svensson method, which has been working for us for such a long time and continues to work, requires hardly any time at all. 15 minutes a day or less.
Elon, I'll tell you that. If I would following Svensson's method or Buffett's or anybody else, there would be no need for my program. I would rather do something else. What I'm doing is I'm trying to uh, not even like teach people or convince people in my methodology or anything. I'm just sharing my experience with our listeners. Your experience you cannot share because you have
Yeah.
dubious experience of getting uh, killed half of your account in cash and following 493 useless redundant stocks instead of other people, maybe like Jim or myself, following some of the seven most successful stocks in the history of our time. And then you, to support your theory, you are talking about some funny things about when you are buying stock from somebody else, only one is right. We already spoke to you about the lunacy of this statement many times, probably more than 20, but it doesn't help. You just keep.
Here's something interesting, Sasha. Here's something interesting. The Magnificent Seven was named after Akira Kurosawa's seven samurai. The seven samurai, of the seven samurai, four wound up dead. And so you have to accept, Sasha, that you're exceptional and James Reed is exceptional. And most people cannot equal the market. Equaling the market, as you know, is very simple. Just buy an exchange-traded fund that tracks the S&P 500. But most people don't do that. So you are a star, not just your last name, but you are Mozart when it comes to investing, and so is James Reed. Most people aren't. And so what works for you also works in a short run. In the long run, it doesn't. If you stay in business long enough, ultimately you go bankrupt. No question about that. And so the American economy, well, empires have 100% failure rate, and the failure of the American empire is nowhere near in sight, because still today, most foreign investment funds are invested to a large extent in the American economy, except for Indonesia, Turkey, and Nigeria. Yeah. So the American empire is not about to fail. Investing in the American empire, in spite of all the losing stocks in the S&P 500, has worked and will continue to work. What has worked in the past is very likely to continue working in the future. And so you are doing well, James Reed is doing well, because you're exceptional. Most people aren't. Yeah.
Milan, thank you very much for your opinion. Jim, thank you very much for today's program. Have a good luck in trading for next week. Bye-bye, everybody. Thank you very much.
Thank you, Sasha. Thanks. Yeah.